Thank you very much, ladies and gentlemen, for joining us today for this Future Forward Insightful Accountant webinar event with our theme of integrations and workflows. We want to thank Insightful Accountant and our sponsors, Xero, Qvinci, Quadrant, and Guideline. The name of our Future Forward event today is How to Streamline Month-End Analytics and Reporting to Deliver Enhanced Value to Clients. First, I'm going to turn over the mic to Murph to ask him to talk about the CPE requirements and maybe do a poll.
Thanks, Brad. So, folks, we're trying to find out how many of you really want to have CPE or not. And so we're going to have a poll question right first. If you're interested in CPE for today, answer that yes. Otherwise, answer it no. We've had a lot of people tell us that they're not really interested in CPE, but I know a lot of other people are. And we're not going to take very long on this. So let me just count it down. 5, 4, 3, 2, 1. Now, in order to get CPE today, you have to be here for a minimum of 50 minutes out of the hour, and you have to answer at least 4 of the 5 subject matter polling questions that Brad will be presenting and will have during today's actual, as I call it, meat and potatoes. The other thing we want to know is, are you aware of the fact that we now have a program called Be Insightful that contains premium content, and that content varies by subject, but it's far more in depth than what we traditionally run in Insightful Accountant. For example, just yesterday I posted a new feature on migrating from QuickBooks Desktop to Sage 50. And that's a relatively lengthy program about the benefits of Sage 50 as compared to QuickBooks and also the steps it takes. That's the kind of content you'll find along with really detailed webinars. So if you're interested in finding out more about Be Insightful, just answer the poll question that's been put up. Would you like more info about Be Insightful? Yes or no? Now, we have actually a free Be Insightful membership and a paid membership. You'll get all the info about that. And some content is available from free membership and other is restricted to paid membership. So I'll just count it down one more time. I think he already closed it, so that's fine. Brad, I'll just turn it back to you.
Thank you, Murph. And Murph, I just wanted to verify you're still seeing the full screen of mine.
Yep.
Okay,
absolutely.
All right. Well, listen. Let's get into it. Okay. The first thing we're going to do is I want you to introduce you to our presenters. William Bill Murphy. We all know him as Murph. He's a senior contributing tech author at Insightful Accountant. He's going to be one of our presenters. And we have Charles Nagel, our founder and CIO of Qvinci Software. He's our other presenter. This is going to be a very conversational presentation by Murph and Charles. And I, Brad Adams, will be basically the moderator. I'm the president, CEO, and chairman of Qvinci Software. So let's talk about what we're going to do today. Okay, just welcome everybody here. Kind of give us an impact. You know, what we specialize in is helping people grow their advisory service profits with faster and easier end of month reporting and analytics. Okay, this impactful demonstration is going to demonstrate Qvinci's powerhouse business intelligence analytics and financial reporting functionality that I want to let you know is not available in QuickBooks. Okay, these can be used by accountants to really deliver high value advisory services to their clients, specifically multi-entity, multi-location, and like industry. So in this show, we're gonna discover how to supercharge your end of the month client interactions, position yourself as a trusted advisor, and drive advisory services revenue and accelerate your firm's growth. Okay, so we're going to break this webinar into 7 sections, okay, which are our learning objectives. The one being consolidation of your disparate client location data. 2, deliver analytics and reports, okay. 3, evaluate entity performance against an average of the top 20% or your entire ecosystem. Number 4, simple tools to set benchmarking standards and rank performance. Become that trusted advisor. 5, how to attract, retain high-value clients by delivering deeper, more impactful financial insights. 6, learn the language of your clients, cementing you as their indispensable strategic partner, and then launch your program with Qvinci's QTAP, the Qvinci Turnkey Advisor Program. So we're gonna go through a discussion in each one of these sections. This one, I'm gonna take a second here. I just wanted to give you some of the top accounting firms and accountants that we provide these services to, and we provide them for firms of all sizes and all kinds. All right, I'm gonna spend a second on this one before we move into the first one, but what we're really trying to do is develop a push-pull dynamic, okay? Push, okay? We want to give something the clients can easily understand. Green and red, favorable, unfavorable. It will motivate or push the client to reach out to you as the accountant to seek corrective help. The pull, example, advisory portal. We call it the client wellness dashboard. We're going to go over that in a minute. It's a single view of all client financial wellness. Again, green versus red. Green is good, red, we got to talk. And really motivates the accountant to reach out to the client and pull them into the advisory practice. Everything we're doing here is trying to maximize this push-pull dynamic. Okay, let's do polling question number 1, Matt. Okay, would you like to learn how to use Qvinci's tools to maintain a chart of account consistency when preparing automated consolidated reports across multiple locations? Which this is preparing the data for you to advise your multi location or multi-entity customers. Yes or no? All right, Matt, I think that should be time enough to answer that simple yes or no question. So why don't we go ahead and close that one out? We got yes, 47%, no, 53%. Well, let's see if we can't change some minds by the end of this webinar. All right, number 1 is, and these all relate to the learning objectives, is consolidation of disparate client location data into powerful business intelligence, okay? It's the first step in providing meaningful insights. We use a patented mapping tool at Qvinci to map all this data to a standard chart of accounts so you can have comprehensive business intelligence. By having all the data in one place, you as the trusted advisor can have a holistic view of each client's operations. All right, the client wellness dashboard. I'm going to turn the slide over, the screen over to Charles. Charles, why don't you bring up your client wellness dashboard and give a little introduction on how to use that. And I know Murph is going to have a couple of questions for you.
Okay, are you seeing my screen?
Yes, sir.
Okay. Murph, did you have some questions before I get into it?
Yeah, so I was really shocked there when I saw that a whole lot of people, majority, weren't interested in having standardized chart of accounts. And let me tell you, folks, there's no way to have multi-entity reporting if you don't have standardized chart of accounts. Now, does that mean that you have to have the exact same accounts in every one of your files? No, it doesn't. Qvinci has a tool that actually maps all that together into one consistent chart of accounts, and that's critical. And the other thing is they can do it with all different kinds of QuickBooks, for example. You can have people who are using QuickBooks Online, people who are using QuickBooks Desktop, people are using QuickBooks Enterprise. It doesn't matter. They can map it all together. They can go out and gather it and get it without having to have it imported and this, that, or the other. It's a phenomenal process. And as Brad pointed out, this red is bad, green is good business is critical to keeping things simple for your clients, but also for yourself. It just immediately helps you recognize issues wherever Charles has implemented it. So, Charles, I'll shut up and let you tell them a little about the advisory portal.
Okay, so the advisory portal is something that accountants use to kind of get a snapshot view across all their entities in the health and wellness, really. And red's bad, find red, fix red kind of thing. And everything you see on here, everything on the screen is typically clickable and drillable. For instance, these are all my entities, and these are my different segments. I got clients that are restaurants. I got some dioceses. I've got some dental clients, and you'll see a landscape across all your clients here. And if you want to drill down to the GL, you can actually, without opening QuickBooks, click this open and drill completely to the GL. It's not the only way to get in, but to give an example of, you can drill down to the GL and look at transactions in every one of these files, whether it's QuickBooks Online or desktop, doesn't matter. You can also insert journal entries into a QuickBooks file without ever opening the QuickBooks file. So this is a time saver for accountants that are managing a plurality of clients. What this does is we're going to show you these headers are automatically calculated. We give you a plurality of periods. I'm looking at month over month versus prior month comparisons here. I could look at fiscal year over fiscal year, find red, fix red, right? So if I were to click this, it's going to take me into what we call a card, a data card. It's going to show me why total income for this entity is trending month over month 2% the wrong way. And that's what this is saying. So net income, top 10 expenses, net profit, cash, ARAP. These are the things that we've summed up for you right here. Can you imagine doing this manually out of every QuickBooks file as an example? If I were to take the Bristol Beer Garden and I were to take a look at why is this 16%, the COGS, why is it going the wrong direction? If I click this here, up comes a card and it says, okay, look, their COGS is $24,400, $447 this month, $21,161 last month, going the wrong direction. And if I click this tab, I'm not going to spend the time doing it. It's going to bring up the P&L for both of these periods, and it's going to show me exactly a full P&L for that entity. And I'm going to see what's different in the cost of goods between those 2 months. And I can send that to my client. Hey, Mr. Customer, I got your back. Did you know your COGS is 60% higher this month than last month? Here's the data. Qvinci lets you look and interrogate things from the portal and then dump it down in a format that a client will understand and send it to them. This is why this helps you become a trusted advisor. So you're just going to look for red. You're not going to find error. You're not going to try to fix everything on the planet. You're going to look for the biggest offenders. And this client has got some problems. And I want to know why that net income's up. Well, net income is 25 versus 34. I click this, it's going to show me. Now I'm still positive, but I'm trending unfavorably. Red means trending unfavorably. So Bill, this is basically a landscape view across every client that you've got, drillable down to the GL level, literally from anywhere on this page, across a plurality of periods. It's a really powerful tool. And that way, generally right now, all of our clients are isolated. I mean, you got a QuickBooks file, you got to go in that QuickBooks file and look and try to find data. This brings it all to a simple to digest page. Brad, back to you.
So, one of the things is that you're going to hear a lot about in this newest version of QuickBooks Online is all these agentic agents. And one of them they talk about does anomaly detection. Well, that's exactly what Qvinci's doing right here. The difference is it's QuickBooks anomaly detection is in one file, and here you're looking at all your clients' files, and immediately you can see all the anomalies, all the out of balance things, all of the, as Charles showed you, why in the heck is cost of goods 60% higher?
Well, thank you, Murph. I appreciate that. All right, well, let's move to number 2, which is delivering actionable multi-entity analytics across each client organization. Okay, and Charles, I'm going to ask you to bring up the performance dashboard, kind of talk about it. And Murph, I know you're going to have a question or two in there.
Okay, so I've already got these hydrated. What you'll do is you will come to run these reports, you'll go to our libraries. And when you run the libraries, you'll pick whichever template you want to run across however many entities you've got, right? This is how you choose reports in Qvinci. And so I've already done this, and I've already run. So this is what we call the performance dashboard, and I'm running this. So to talk briefly about the consolidation thing. Listen, if you have a client that has 4 QuickBooks files, as an example, you might want to see this across 4 QuickBooks files. Everything in Qvinci, literally everything in Qvinci will run on 1 to N entities, whether you've got 1 entity or 700 entities. So this is what we call the performance dashboard. And I'm running it across. You can see the name of this client of mine is called Austin Brew. And I can pick different periods, over here and kind of see, I'll look at June. I'm going to compare what it looked like in May. Now I'm trending favorably here. Total expenses. This is the last 12 months, and the month over versus the prior month, it's 7.4%, and it's gone down. So that's trending favorably. So it's green. Gross profit has gone down by 2.4%. It's red. Find red, fix red. Well, I might want to look at May. Here's May's numbers for Austin Brew. Well, and monthly is great. Maybe I want to look at the 3-month dashboard. Here's the 3-month period. And if I want to change the periods, I'm look at the prior quarter. Here you go. Same thing with fiscal year, year over year. Well, what Qvinci does, and when we're talking about multi-entities, that kind of thing, I can run this exact same template like I showed you where we went over here and we found the report that we wanted to run for a client as an example. I can do this. Instead of selecting one entity, I'll select all 3 of these entities because he's got 3 locations and I want to give him that exact same report, but not for just one. I can run it on one, but for all of them. Here it is hybrid across multiple entities. Austin Brew, Bristol Beer Garden, Morristown Cafe, and it runs exactly the same. It's just that all the numbers are consolidated. And we see that these are different numbers, right? Austin Brew, Bristol Beer Garden, all 3 of them. So it navigates the same. And this is what's really cool about a solution like this. Every client, I can't tell you how many accountants we have that have clients that say, my customer gets this. If you send them a P&L with 3 entities on it, and we do that, we're going to see that in a little bit, with 3 entities on it, that's fantastic, but that's one level down from this. The first thing you want to show them is the high-level business intelligence trending. That way they know and you know when I go look at those P&Ls, I'm going to look at this area. I'm okay here. COGS is a problem, and total expense is a problem. So I'm going to focus on those things when I look at the detail behind it. Bill?
Yeah, I mean, you could send this report out combined all the multiple entities, and then each one of the entities, and it'd be real easy for them to look and see, where's the problem.
Yeah, let me show you this. What I just did was I loaded up the Excel version. All reports in Qvinci are exportable to Excel. And the navigation that you had online in Qvinci works in Excel. So when you send this to your client, they get this Excel file, and guess what it does? It works the same. So you're sending them dynamic business intelligence that they understand and they get to play. And that's really, really important. Don't underestimate the value of hands-on playing. When you send them something that they can navigate and move around and interrogate, they're involved in the business intelligence. Now they're involved with it with you, and you got a common language. You're not just sending them something out and and they don't, it's just a big pile of numbers and they don't get it. You can, when you run these reports in Qvinci, you'll send them to your client. And you're going to, I'm going to not say this, and it's going to run exactly for them as it does in Qvinci. Brad, back to you.
Charles, why don't you go over quickly, in the interest of time, the by entity P&L report and the Qvinci budget tools. Just kind of briefly go over those.
So this is what one of our, we have about remember I showed you how to go in and run those reports. So this is an example of a by entity report with vertical analysis turned on. If I had 27 entities, I get 27 columns here automatically. 1, 2, 5, 12, 100. And so this particular report is going to give you the P&L. And now let's talk about that standardized chart of accounts. Imagine with me that this is QuickBooks Online and QuickBooks Desktop and Xero or QuickBooks. And your chart of accounts is different in every one of these files, let's say, because you got different accountants using it. And they say rent instead of business office space. Qvinci's ability to map the chart of accounts for Austin Brew, Bristol Beer Garden, and Morristown, as they are in the QuickBooks file, into a standard allows this P&L to be 40 lines long, not 100 lines long.
That's
So
great.
this is a report, a standardized report by entity using a what we call a SCO, a standardized chart of accounts, automatically mapped over here for you, and it shows the consolidation. So how would you do this manually? Well, you'd go dump a P&L out of every one of those locations, put them in Excel, and try to combine them up. Qvinci does this in 5 seconds, 3 seconds, something along those lines. So this is an example of a P&L, and we've got, I don't know how many permutations, 30 permutations of a P&L. Let's take a look at the same process with budgets. Qvinci will pull budgets from QuickBooks, and or you can upload from Excel. Looks familiar, right? So here's a budget versus actual as an example for Austin Brew with a diff and a percent of budget used, okay, by entity. And of course, same kind of thing. Qvinci consolidates. Here's the consolidated budget versus actual for the period in question, which is, this year, that's this fiscal year today, January through June, right? So you're looking at a P&L by entity with all the detail in a standardized chart of accounts. And what's great about Qvinci is this: you don't have a different report for different clients. If they're a dog walking franchise or they're a HVAC, this same template, the same template in Qvinci will go across any client that you've got, any of them automatically. So you don't have to have a different report for every last one of these clients. Brad?
Thank you, Charles. I appreciate that. Let's go ahead and move on a little bit. Let's pull up polling question number 2, Matt. Are you interested in learning how to analyze an individual's location's performance within a multi-entity organization, include how it ranks or compares to organizational average? And this question has, as an advisor, would you be interested in learning how to do this? All right, I think that's about good there, Matt. 50-50. We got some convincing to do, Murph and Charles, but 50 is a good number. So, all right, well, let's move on to number 3, which is how do we evaluate performance against top performers and your organization-wide ecosystem. Okay, and we're going to talk about this thing in the entities at risk versus high performer report. And Charles, I see you have it up here already, so I'm going to ask you to talk about this. And Murph, ask him any questions you'd like.
Okay, so this particular report is a configured report. Again, it runs across a plurality of entities. And when we say entities, these are your client names, if you will. And we've got these headers here, and you will set these parameters that you want. I want my gross profit ought to be about 31.9%. Don't want my COGS to be more than 45%, that kind of thing. You make those changes over here on this, where you say, this is the account, these are the accounts I want to take a look at, and these are the ranges I've decided, okay? And what this does, it identifies everybody who offends them. If it's yellow, they're offending. And this particular way we use this report right now is it's called the entities at risk. These are the ones that are at risk of violating these parameters. Here's the average across all the entities you're interrogating. If you've got 64 dentists, this is the average across all your dental clients, like kinds. And what you can do is you can come down here and say, look, I want you to highlight everybody who violates 4 of these parameters. If they're yellow, they're violating 4 of these parameters. If you say, well, I just want to see everybody who violates 2, you're going to have a lot of yellow. I want to see how many people violate 5. It gets less. So you can show, and this shows all entities. Show me only the entities that are violating, okay? And here they are. So you're looking for your outliers, your worst performers. These are my entities that violate at least 4 of these things, okay? And here's their actual numbers. Again, we are interrogating what's happening here. You can also flip the switch if you want to and change it from at risk to my best performers. So I want you to show me everybody who's best performers with 5 or more categories, that kind of thing. So this is a tool for you as a pro advisor as an accountant to evaluate your entire ecosystem against some parameters that you've set. So if you've got, you may want to select um, different parameters for different industries that you have clients for, multiple clients for. Again, they don't all have to be the same business. You can group all, HDA does this, group all your dental clients into one Qvinci group and use benchmarking to compare them all to each other anonymously. Well, how would I use this? Well, I might go talk to, this is let me turn this back to best performers. I might go take a look at this and I might drill down underneath there to find out what the actual numbers are. But I might go take a look, for instance, over at, entity 77 here, and they're 86%. And I might take a look at this and I might want to send this to a client. I'll tell you who'll really care about this. If you have a multi-entity owner and they got 27 locations, send them this, because it's really eye-opening as to how every one of their entities is performing against the average range and the ideal range. Now, Brad, I think we're supposed to also look at the ranking report as a function of this as well, ranking benchmarking. So I'm going to hop over to that real quick.
Okay, why don't we go ahead and rock over that, and Murph, you chime in whenever you want.
Well,
Yeah,
the only thing I'll say is I'm kind of surprised Charles hadn't built into that report where the worse they get, the closer to red, the better they get, the closer to green from the yellow. Uh, that's kind of the only real observation I have. I mean, it's a phenomenal report.
Yeah. So I built this one. I actually built this one for a real multi-entity client, and now it's one of our standard reports. It's called the benchmarking and ranking report. It's one of the most powerful things we have. Again, this would be the name of the entity over here. It'll run across all of them. And what it does is it shows you the top 2% for these categories, and you can customize 3 other categories that you want. You see, I chose hot beverages, waste, and local marketing. So you've got these standard categories, and it shows you the top 10%, 20%, and the average of the entire ecosystem. I got 36 units in here, and this is the performance for each one of them, and all these columns are hot. So I can sort these in ascending to descending order, smallest to largest. And how would I use this? And listen, it's pretty straightforward, right? I'm going to sort COGS in descending order. My worst performer in location number 35 is 78.9% compared to everybody else, and I highlighted them yellow. I know exactly where and how this was used. Was they had a number of locations where the COGS were abnormally high compared to the average in the top 20%. And did they know what to focus on those 9 locations they went out and talked to? Absolutely. They clicked the number, they drilled down to underlying the GL data, like I showed you, drilled down to find the transactions, and they saw what was happening. And what was happening is they had a lot of waste. A lot of waste. Those locations were buying too much and throwing it away. And they went in and made adjustments. And all of a sudden, these numbers got better, which meant that number got better, which meant that number got better. So this is a multi-entity evaluation tool that runs in seconds that shows you who is offending, how strong they are, and how they compare to everybody else. Bill?
Yeah, Charles, is it possible to plug in what I'll call industry data from sources like Bloomberg or one of the Thomson Reuters, one of the people that compiles data by industry to pour that in through
You could.
Excel?
So what you can do is you could create a custom location in Qvinci and call it industry numbers, whatever, and upload that from Excel. And they'll be here. They'll look just like an entity. These numbers will all be populated for the periods in question, year to date, or any other period you're looking at, right? And you'd be comparing them. So this would be you'd have like your industry standard number here and all the other locations underneath, and then the ecosystem standard. So yeah, you get the best of both worlds, Bill.
Yeah, great.
Thank you, guys. I appreciate that. Let's pull up polling question number 3, and then we'll move on to the last 3 items. Would you like to learn how to establish and leverage benchmarking comparisons among locations within a multi-entity organization using conventional tools? All right, that should be close to it, Matt. Okay, all righty. Thank you very much. We have a few of you that'd like to do it, some would not. Let's continue on. All right, let's go to number 5. Okay, it's how do we attract and retain high value clients by offering deeper and more meaningful insights. That's the whole purpose of what we hear today is how do we attract and retain higher value, more profitable clients to our practice. And Charles, that's going to go to our what if break even analysis. And if you will pull that one up and talk to them, and Murph, I know you had a question about that as well. So go ahead, Charles.
Okay, so this is a tool that not only shows you break even, if it shows you forecasted break even if you want to play some games. By the way, this is Excel. So you'll run it in Qvinci, it'll gen this, you'll look at it, and then you can send it to your client. So this is going to be my fiscal year today. Again, I'll pick my periods, but I've got my fiscal year here. And it shows me all of my controllable costs and what their ratios are. And my break-even point has been calculated, and here's the number. So I got it graphically, nice graphical representation. Here are my non-controllable costs, and here's everything else that are like outliers that are really small, right? So I'm looking at this, and we populate the what if column with starting with this one, and now you can come over here and play games. So for instance, we know that material B cost was historically 15%, and I can come over here and say, well, what if I could make that 13.5%? And it'll change, and so you'll start playing what if games in here. You and or your client will start looking about what they can control here. And they may also make changes to not what kind of non-controllable costs. You're not going to change rent probably, but you may have salaries change or something along those lines. And of course, you get a new break-even point. As you make adjustments over here, you can see my break-even point graphically and empirically is different than this one. So it becomes a cross between a break-even and a budgeting and a forecasting tool, basically. Put in what you think you can do, okay, and then manage your company to that. Bill, did you have anything to ask
So,
about that?
as I mentioned in my article this morning in preparation for today's session, this is one of the tools that, in my mind, potentially turns you not just into a trusted advisor, but a superhero for for your clients because you can identify the issues and the problems real quickly, and then you can play around with it and show your client. Now, here's alternatives. If you follow these alternatives, it's going to change your situation drastically. And yeah, you can let the client play with it too, but it may help for you to actually take a first look at, what the best alternatives are.
Well, thank you, Murph. I appreciate that. And Charles, I think you're going to next bring up the what if cash flow forecasting tool, and talk a little bit about that.
Yeah. So this one is even more granular than the one we just looked at. It's not a break-even analysis, but it is, you'll select sometimes your seasonal, single range or seasonal type data, and you can pick your starting month and your ending months and that kind of thing. And it shows you actual running cash balance versus your what if. We've had people use this tool that said, I think it saved my business. I didn't know what to pay attention to. And what you'll do is you'll come in down here and it's same kind of an idea. I think my beverage sales, so you starting with February, we project out starting with February in this particular case, because I chose February. If you continue February all through the year, this is what you're going to look like. Okay. Now do something about it. Now, what we've had people do is they would see that they would pick maybe 4 months back and their cash is dropping like crazy. So they come down in here, they pick February, and they start to make changes down here. Contract labor, it was $2,700 in February. In March, actuals was $4,050. I'm gonna cut that back to 25%, not 100%. I don't want to spend $4,000. I want to spend 25%. And I put these numbers in across here. And I come down in here and I start cherry picking the things that I think I can make headway on. Media, print, and advertising. I'm gonna dial that back to 75%, 75%. And as I make these changes, I'm going to see a what if net income versus my what if net income is a negative 6,600 so far, and it was going to be if I kept doing it $25,000. And I'm going to see these charts begin to change. I'm going to begin to see the green that is going down. The what if I make these changes, I'm dialing in a likely future, a likely reality. And so all you do is if you do that, you can do this for the client, or again, dump it to Excel. This is Excel, send it to the client and have them say, look, I'm going to make these changes out here and I'm going to manage to that. And the whole idea is, you know, you're going to end up where you design managing to. And that's really what this comes out to be. Bill, did you have any points on this?
Well, once again, I mean, this is one of those tools that people don't have a way of managing without Qvinci. I mean, everybody needs a cash flow tool, and there's all these apps out there, and invariably all they do is show you where you're going. They don't give you any option to say, no, I want to find out what I've got to do to get where I want to be, not where I'm going to be if I don't have those options. And this is just a phenomenal advisory tool.
You know, one of the interesting points about this tool and all of our tools inside Qvinci is you could use it as is, and most people do, but we can customize it as well. And then that customization is the real differentiator, because at the end of the day, I saw a study the other day, Murph, that 30, if you provide advisory services to your customers, you can expect somewhere between 20 and 30% increase in fees. And the second thing I thought was noteworthy was 80% of firms today are actively investing in advisory services. So if you don't provide advisory services to your client, someone else will. So I thought that was a very interesting a bit of statistics. And
Well,
go ahead, Bill.
again, if you go in telling somebody, I've got bad news for you, unless things change, you're going to be closing your doors in 6 months because you're just running out of cash. You can't possibly manage what your future's going to be. And now is the time, actually, 6 months before this was really the time for us to begin. But we've got to look at what we can do this month, what we can do next month, what we can do the month thereafter in order to get you back on track, in order to keep you not only in business, but to make your business excel.
Yeah, I agree. I agree. Thank you so much, Murph and Charles. Let's move to section 6, which is let's learn how to speak the language your clients understand to cement your role as the go-to trusted advisor, or put another way, their strategic partner. Okay. And Charles, you're going to go over a couple of different versions of our KPI scorecard to show you a simple tool that everyone can use to sort of get that first step in becoming speaking that language the clients can understand. Go ahead, Charles.
So we call this the KPI scorecard. It automatically generates for you. If you're running on multiple entities, it'll put the top 5 accounts in here automatically. Not that you can't change them out, you can. But the top income accounts, COG accounts, expense accounts, and then some ratio analysis down in here. And what it does is it reads the ecosystem. So let's say you had 27 dental clients. Okay, they're all independent businesses. Got it. Qvinci doesn't care. This is the average of all your 27 dental clients and the top 20%. Okay. And we automatically establish this range, wrapped around what you did the last 12 months. So you can see the system average is much higher than Morristown Cafes, but this is what they did. So we do a 2% low and high. And then we give you, for the period that I'm looking for, which is this is the reporting month, how did I do against what I've been doing as an average the last 12 months? And I did $34,000. It's green. Green is good. I beat what I did, and every last one of these is higher. Now, compared to the last month, that's higher because this is higher than that. I got a green check. I got a red X down here. I did $12,390 in wine sales last month, and now I did $9,300. I'm trending the wrong direction. And the average, the last 12-month average, the 8136, not too bad. Doing pretty well against the standard. Not doing so well against some of these other standards, these other entities. Now it's reverse polarity. If your cost of goods is getting out of whack, then it's much higher, right? So wages, that kind of, so we have some expenses down here. Again, these can be tuned if you want to, and you can see certain things are green, and if it's black, it's in range. If it's red, it's outside the range. Well, clients get this. They understand this. They don't have to dig through a P&L for the last 12 months to look at all the numbers and trying to find out what went wrong where, how they're doing. This turns it into a language they understand. And this is not the only page in here. This is the KPI page. Then you show them the top 10 expenses. Here are your top 10 expenses, Morristown Cafe, period over period. And you can run this year over year or month over month or quarter over quarter. But if I look at month over month, merchandise cost is trending unfavorably, good, bad, good, bad, good, bad, bad, good. And here's the average of the last 12 months. They begin to see what their 12 worst account, 12 biggest accounts are. And they can look at their year over year income and net income. And they can see how they're doing. And when the blue bar, okay, is lower than the gray bar, okay, this year's worse than last year. We don't want to see that. Same thing with net income. This is obvious. Lots of red, lots of bad. So same kind of thing. When last year, this year's worse than last year, we got us a problem. And then you can look at the running cash balance, and again, these fictitious files, so you'll see the cash balance all over the place. And if they have AR and AP, we have an AR and AP analysis tool on the last page, all in one scorecard. Right? You click the client. Now, here's the other thing. If you have a client and they have 12 locations, select all 12 locations and run this report. And you'll get a consolidated average across all 12 locations compared to everybody else. So it's a very powerful tool, and clients understand this kind of thing. They totally get it. The other thing they'd like to have is ratios. And I know, Bill, this is kind of like near and dear to your heart. You got to report to the bank, right? You've got loans. You can make it hard. They want to see period over period. They do. Here they are. They're all rolled up for you right here, right now. And red, obviously, is not doing the right thing, right? So, Bill, I'll let you talk for a little bit.
Yeah, I mean, this is one of the things that not only business leaders need, but who they report to, their board of directors or their owners, et cetera, and then ultimately their lenders. And they invariably prefer to see this kind of a report over just financial statements, because if they just get a set of financial statements, they turn around and have somebody start calculating all of these ratios the old-fashioned way. Uh, and I know a lot about that. I wrote a book about how to do it the old-fashioned way. And what used to take hours, Qvinci does in seconds or even milliseconds. And it's again a valuable tool because it immediately catches your eye. This is a problem. This is red, or hey, I'm doing great here, but I still have a lot of red.
Well, and I'm going to mention something we really haven't talked about. We've shown you a bunch of reports, guys, right? You can package them up. I mean, you can take, I like that one, that one, that one, that one, that one. I got these 12 reports, 15 reports, whatever. You can say, I want to group them. I want to group them all up. I just want to log into Qvinci, select the entity, restaurant, GL, whatever, click download, and this whole package of stuff will come out. PDFs and Excels where they're, we got a lot of columns. You want that to be an Excel file probably versus this you may want maybe you want it as a PDF, but you can package them all up very quickly, download it. It takes, like a minute, and you've got a complete package for location A or client B. And if they're a multi-entity client, you'll have by entity reports all in there. So you're not going and generating reports all the time and then doing a bunch of business analysis all the time and finding it difficult to bring this all together in a simple, easy, deliverable package.
Thank you, Charles. I appreciate that. Let's go to polling question number 4, and then we'll go down to our Qvinci Turnkey Advisor Program. What's the biggest challenge currently holding you back from offering more advisory services to your multi-entity, multi-location, or like industry clients, as discussed in this webinar? Lack of know-how, resources, lack of vendor support, lack of client demand, all the above, none of the above. Let's go ahead and answer this one. Interesting, interesting results. We got very interesting results, but the lack of know-how and the lack of vendor support, that's a high percentage, those two, and Qvinci can solve that. Thank you very much, Charles. I think I need to take the screen back from you.
Go ahead.
Okay. Let's see if this works out. Okay. All right. Murph, am I on number 7 in a
Yep.
full mode? Good.
You are.
I actually got one right. All right. Well, what we're going to talk about now is, how do we take all this stuff we just talked about and seamlessly launch and market and scale your advisory practices? Well, Qvinci has developed a proven turnkey advisor program. We call it QTAP. Okay. We're going to give you a way that you can take all these tools that Murph and Charles just spent the last 45 minutes talking about, and how to deploy those simply, because clients may not want to pay you for the grunt work of creating spreadsheets, but you don't have to do that because Qvinci has them right there and has the data collection program to get you started. Okay, so let's talk about first the advisory life cycle. We're going to concentrate on step 1, step 2, and step 3. That's the QTAP program. Review the metrics, generate the reports, spread the word. Step 4 and step 5 are your more advanced areas. Charles went over the forecast and what if analysis, both in the what if break even and what if cash flow. And Charles and Murph also talked about step 5, compare and contrast, vertical market, benchmarking, ranking, all the different areas in that area. But we try to make this simple for people to get started with step 1, 2, and 3. And then once you master that, go to step 4 and step 5. Okay, so the Qvinci Turnkey Advisor Program. I'm going to go over here today, but I suggest that you talk to one of our solutions consultants and let them explain it to you. All right, step 1, review the metrics. That's the advisory portal that Charles went over in number 1 today. That we call it a client wellness dashboard advisory portal. It's easily color-coded problems. Murph talked about it. Green's good. Red, we got to talk. Okay, you start there. Okay, and then which is, I'll give you another picture of it. The advisory portal, and if you remember, Charles went over this in the beginning. So, and then step 2, generate the reports. That's the KPI scorecard, which Charles just went over in financial reports. Build a package. Step 3, spread the word. And that's our advisory services marketing kit. We have a how-to ebook that explains you exactly how to do it. And we'll go over that. Step 2, we've already gone over all of this with Charles early on, so we don't really need to go over it again. But it's
Brad, can I stick one point in here? I'll make sure everybody understands.
Sure.
On this particular scorecard you're looking at, you'll see there's no benchmarking there. The QTAP program, everything at Qvinci will work for your singles also. It doesn't have to be multi-entities. What he's talking about here with all these tools is it can automatically generate for your guy. You may have a family family business, a client that's got a family business, and they're pretty big and complex and that kind of thing. You can do the same kinds of things very, very, very quickly for your single clients as you do for your multi clients. And we have tools that are built for clients that aren't part of a bigger ecosystem.
It's a great point, Charles. Thank you for making that point. Step 3 in the QTAP program is spreading the word. It's our marketing kit. And you're going to get a copy of this deck, and all these links are hot. It allows you to take an email, put it in your Outlook, and add your own touch to it, and send it out to staff, to clients, to prospects. It's a whole kit of how we implement the QTAP program. And Murph, wanted to ask you if you had any questions to myself or Charles with regard to the QTAP program.
Well, what you've done is assemble everything that an accountant, a bookkeeper, a pro advisor, a consultant, business consultant needs in order to become a trusted advisor. And as I mentioned earlier, and once again in my article today, many of these tools are only available through Qvinci. And many of them are the key to business success. And they, in reality, have the potential of turning you more than, again, much more than just being a trusted advisor, much more than just being a partner, but truly being a superhero to your clients.
Yeah, well, I agree, Murph. And we have a whole customer success team that knows how to implement this product, and we have a lot of really small bookkeeping firms and accountants that are adopting the QTAP program because it's so easy to use. You can start it out with 10 prospects or 10 customers and build from there. Charles has a customer that started out with about 100 customers. He's over 1,000 now. With this program. So as I said earlier, if you don't provide your clients with advisory services, somebody else will. So that kind of brings up all of the 7 points we wanted to cover today. So what are our next steps? Okay, everyone's going to get a copy of this deck. All these links in this deck are hot. Private demonstration. It'll open up an Acuity calendar. You can pick a date and time convenient for you, and we'll have a team ready to go over with you this QTAP program from soup to nuts. You could also attend one of our live product-focused webinars on Tuesday that are geared more toward accountants. Or if you want to go right into the deep end of the pool, you can sign up for a free trial. Okay? And we have a special discount. Just tell them you're with the Insightful Accountant Future for July 2025. We'll give you, whoever signs up in the next 30 days, $5 a month per linked and synced business unit for the first 2 months, plus 20% off of onboarding. That's like a 90% discount. We think that it's a good 2 months to get you to learn how to use it before you start paying the full rate. So finally, we have the recap of what did we do today. Okay. Well, we learned how to address some common challenges faced by accountants and bookkeepers and advisors when they want to provide advisory services to multi-entity or like industry clients. Okay. And we covered data collection, consolidation, and mapping of multi-entity or multi-location client data, which is absolutely the first step of providing these reports that you saw today. We established how to monitor client-defined standards. We automate all manual processes so you can do this profitably. At Qvinci, we have an ROI calculator that we'll go over with you to show you the difference between doing this stuff manually and doing it with Qvinci, and you'll be shocked at the results. Because one of our biggest things is to eliminate non-billable time. And I know that's a big pain point for accountants. And we want to provide the necessary tools and technologies to make this all very profitable. And finally, we want to help you market your services to staff, clients, and prospects. Staff is more coaching. Clients and prospects would be more for increasing your profits. Okay, polling question number 5. Let's go ahead and bring that up. If you provided the type of multi-entity, multi-location, or like industry advisory services discussed today, do you believe your clients would respond positively? Yes or no? Okay. All right, Matt. I think that should wrap it up. Wow. I think we may have changed some minds throughout this thing. You remember we had 50-50 and 30-70 to some of the benchmarking questions. We got 86 yes and 14 no. Very interesting.
Well, one of the things I wanted to say is that recently I saw a study and it indicated that people who are coming into this profession, people who are coming into accounting, people who are coming into bookkeeping, maybe not quite so much bookkeeping, but definitely accounting. These people are coming out of school and they have very little interest in doing number crunching. They have
Right.
very little interest in doing compliance work. They have very little interest in doing the mundane, uh, so to speak. Um, they're being taught, they're being educated. Now, a lot of the uh, states are changing their regulations about becoming a CPA and streamlining a lot of that. And they look at themselves as forecasters. They look at themselves as advisors. They look at themselves as business rescuers. And that's the kind of work they want to do. And so I don't care if you're a firm of one or two, three or four, 10, 20, 30. There's people in your firm who may not be there in a few more years. They're going to retire out, and you're going to be bringing people in. And Qvinci is exactly the kind of tool that those people are looking for. Certainly, you've got to get them to the point that, yes, they understand everything and maybe they've done their fair share, uh, but really, these are the kinds of tools, these are the kinds of analytics, this is the kind of metric information that new accountants, especially, are looking to provide to their clients. And, folks, it's also the kind of information that your clients need. They may not even know they need it, but they do need it.
Thank you, Murph. I was thinking earlier, Murph, about the time it would take an accountant or bookkeeper to grab all the data, make sense of the data, build all the reports you saw today. I don't think you can do it with a few clicks of the mouse like we did today. So, and that's what Qvinci does. It provides you these tools so you can charge them to be their trusted advisor, to give them advice, not to be a spreadsheet jockey.
Well, that's entirely true, Brad. I mean, you know, we wrote a book that was 392 pages on how to do analytics. The book was 392 pages. I tell you, I think it sold maybe 4 copies.
Yeah.
And the reason is that they came out with an app to do this, or they came out with an app to do that KPI, or they came out with an app to do this. But still, it's like 15 or 20 apps to get all the information. And Qvinci does it all in one. It consolidates the data. I can't stress that enough. It consolidates, streamlines, and actually, standardizes the data from all your different accounting sources like nothing else.
Yeah.
You can't do this, and people say, oh, you can build a consolidated P&L in QuickBooks Enterprise. Yeah, it's going to take you probably about 4 hours, and then you're going to start through it trying to actually get it streamlined, and then it's still not going to provide all the analytics. And with Qvinci, it's seconds.
Well, thank you, Murph. I think we're running out of time here, so I'm just going to let everybody know we have an App Academy next week, which is going to be a really deep dive into these tools and giving people a chance to ask questions on the fly. That's July 24th, 2025, 12 p.m. Central, 1 p.m. Eastern. Looking forward to seeing you guys there. And then the last thing is a Q&A session, which we will not have today. We have a number of questions that people ask, and I will make sure that our solution consultants reach out to each person that asks a question to see if we can help you answer all your questions. Sorry we ran out of time, but we had a jam-packed schedule. Thank you, Murph. Thank you, Charles. Thank you, Matt. Thank you, Insightful Accountant and Future Forward. And that marks the end of this webinar.
Thank you, everyone. Hope you had enjoyed the webinar, and I hope you have a great rest of your day. Have a good one.